This is Tom Asprey with the Viper Report market video for October 18th, 2024. I apologize for no video last week. I got caught out of town and couldn't get back in time to produce the video. I have the blue sky background again. I also had that September 20th, I think, because everything was so bullish. And of course, we've had like 6 straight weeks on the upside and, pretty impressive gains. And as I talk about in Forbes this weekend, now all the Wall Street strategists who are looking for, I think it was 48.61 to be the year-end target for the S&P, have raised those levels. When I get a new client, I often, that are infatuated with another analyst, I always tell them to look at their record and see whether they still are infatuated. I had a student last summer who was short the Qs based on the fact that a billionaire was shorting it. Of course, he was only shorting it with a small amount. We don't know what. And he thought that was a great strategy. And, we worked on getting back on the right track. So if you want to find what I've been saying about the markets for the last 11 years or so, you can hit Forbes, Tom Asprey, and you'll get a whole list. And in chronological order. And if you hit the archive buttons, you can go back in the Wayback Machine. But this is today's post. Should you worry that strategists keep raising their S&P 500 targets? A lot of detail in here, but just to give you an idea. So this is a graph courtesy of withplenty.com showing you that Ed Yardeni and Tom Lee were the only ones who are like 5,200. Remember, we closed not at around 48.74 or so, or 47.74, and you can see that a lot of people were way off. I won't go into much there. You can read it on your own, but you can see the S&P targets in 2023 were at 4,009. We dropped below it in the spring of 2023, but then up to the upside. That October 23 correction, I think, held at 4,100. And you can see that, we've been above the target for the year end of 2024 since the second or third week of the year. So what you do about this information is discussed in the article. Of course, the main point is that rely on the data, not what some strategist, newscaster, billionaire has to say, and the AD lines have done a really good job here of keeping us long the market through both of those years. Let's look at some of our charts. You can see here that in September we had the blue sky screen, and 1, 2, 3, 4, 5, 6 weeks. At this rate, we could reach the weekly Stark band here in another couple weeks. AD line, is getting extended, all right, but no signs of a top yet from the weekly, but you wouldn't expect it. And as we'll look at the daily, they're also strong. Even the stocks only, which typically can lag, turned up very sharply in the last week, as did the NYSE all AD line. This chart shows the SPY daily bumping into the R1 at 586.38. The R2 is at 599.81 or so. We could get, we've been bunching up to it, so if we don't push strongly through it in the next couple of days, we could see a pullback here. The 20-day is at 574. AD line confirming the price action. Will we see something like this? Always possible, but that happened before the breakout. So pretty much everybody's holding a winning hand at this point. Put call ratios have dropped down to 0.81. They can get lower, and it's not too reliable an indicator when it's low. You can see this peak here in August was meant too much put buying. That was bullish. The VIX, had some concerns there, but, it's continued to drift down, so that doesn't mean, it still really has got to get above this resistance to start a new uptrend. Since the start of August, the QQQ has been underperforming the SPY by about 3%. That's reflected in the RS analysis, which I discussed in that article. But you can see this reversal to the upside on the 11th was a great buy signal. We recommended both longs in SPY and QQQ, and you can see the AD line, no problem there for the NASDAQ 100. It's been really strong in October. That suggests maybe the Qs are going to start to catch up with the overall market. The high-low analysis, is diverging a bit. We had a peak here, that was right back to the peak, in July. And, of course, we're significantly higher now, and we're bumping into this 300 range. Those of you who have read my articles on this topic know that before we really get a strong sell-off, we would normally see a pickup in the new lows. They're quite low at 17. So, first sign would be we get over, say 110 right here. That would be a concerning factor. If that happens, we'll probably see some other signs that we're going to see a correction, but that may not happen until after the election. NASDAQ Composite, similar sort of picture. Lower highs here. We get back above 200 new lows. That would indicate some heavier selling. For the past couple of weeks, the growth value ratio has been flat. Don't see it too often. We saw it back here in early 21. Whether that's significant or not, that was the last, this rise in value here was followed by a last gasp up in growth, and that before the decline, you can see this really shows you what happened to the tech during the 2022 area. So, overall trend here has to be considered positive. MACDs are moving up, and the RS analysis is still in favor, of value, but not by a lot. In terms of the Qs, backtracking a bit, here's the RS chart. So, we get a strong move above this resistance here. That would be a good sign that, the Qs are starting to lead. You can see the OBV is quite strong here, and this is the McClellan oscillator on the Qs. They show a positive pattern here, held the zero line. So that is all looking pretty good. And of course the AD line is very strong. The futures have done a great job in helping us on the right side of this market. The 260 trading system that Jerry designed, pretty good buy signal here on early in October. Sideways was stopped out, then another new buy, stopped out here for that pullback into the start of the week, and then another new buy signal, projecting, up towards, new highs and close to 6,000. So volume and the stochastic confirmer are positive. During last week's drop, we got nicely down into oversold levels. Let's look at the T&J's watch list, starting off with the ETF. 80.8% are bullish, that are above their quarterly pivots. You can see the growth gauge here, only XLV, which is a lot of things I look at, appears to be bottoming, but it really needs a strong close this coming week. It's about the only red one here in the growth gauge. In the value stocks, XOP is below its pivot, and the energy ETFs generated daily DTS sell signals at the end of the week. They're also back down into support, so their action this week will be likely important. Overall, the balance of the evidence for the value gauge is still positive. Okay, short ETFs are all negative. You want to be long, and TNA, triple leverage small cap, gave a weekly buy, whereas the Qs, triple long, TQQQ, flipped negative. This is the client report they're sent out to ETF subscribers earlier on Sunday morning. If you want to get a copy and see what we provide, just drop us a note with the weekly ETF in the subject line. And we'll discuss the what I see in the various ETFs, new buy or sell signals on a weekly basis. TNA, the small cap, gave a new one last week, whereas UNG and UNL gave sell signals. more interesting is this table, and I've been told that Jerry and his crew are working on some more data that'll help see whether this can be a very valuable tool. I've been pointing out, for example, back in July, we had a sharp uptick in both XLU and XLRE, pretty defensive. They had a great run for, looks, 12 weeks or so. Pulled back, but now they're trying to improve here. They were strongest last week. So does that mean this little correction is over and they're going to gain leadership again? Could be. XLE went from 16 down, up to 100 and then down to 66.7. My experience is if they pulled that 50 to 60 level and turned back up, that often coincides with a pullback in an uptrend. So XLP still looks sick. XLV needs work. XLY, I'm looking a lot more friendly here. So if it has a strong close this week, could get up to 100%. XLK is sort of languishing. As you can see at the bottom here, XLK was was only up 0.4%, for the week. And XLU and XLRE were up over 3%, and XLP, XLI, and XLK, it didn't do much. So that'll be something we'll be watching in the week ahead. This is a rundown of, basically the sectors, so for those who've never seen it, so we look for, this is a quarterly pivot. The fact that they're green means they all closed above their quarterly pivot. This is the weekly DTS signals. Green only, XLV is red. It's also red on the 3-day, as is XLP. And we have a couple of daily neg on XLE. I told you it corrected towards the end of the week. And SMH, the semiconductors, had a wild ride last week, when ASML reported early and kind of rocked the market. So it should be an interesting week for the semiconductors as well. 4-hour DTS. So we'll see if we see some green come back on here or whether we see more red. And XLP still looks weak, though it did give a 1-hour buy. This is a candle glance chart of our current ETF holdings. If you have stock charts, I'd recommend you do this one with your holdings. A really quick way to see how they're doing in that particular day or in that particular week. You can see that ITB had a pretty sharp setback here. That's the home builders, but closed pretty strong, up 1.2%. Pretty much everything looking pretty good in here. XLC, is one of my favorites. XLV is had a good volume spike here on Friday, but really needs to get back above 155. Cloud, is edging higher. You can see that XLE getting back down to support here, and SMH, you can see the sharp setback. So once you set these up, then you can always click on one of them and get an expanded daily view. Like this is the XLF, which has been one of our favorites. Really nice pivot, monthly pivot buy signal at the start of the month, and it's rewarded you. Let's look at the sector reports here. Energy gauge, you can see sort of a mixed bag. Some of the big ones, Hess is still positive across the board. A couple of them closed below the pivots. SLB, a 3 DTS, so will it generate a weekly sell signal or will it go back the other way? So, watching the action intraday, you can see whether this is a pullback that should be bought in the energy or whether the rebound is over. Materials had a great week. I talked about Newmont and Vulcan Materials, etc. All, have new green. So those look like they're going to, should continue higher. 100% positive on the weekly and 91% on the 3D DTS. Industrials look strong. Consumer discretionary, one I'm kind of looking at, just recently recommended. So, TGX and CMG is, just a new weekly buy. So, we're going to get some similar positive signals. Tesla's the big drag on this. And ASIO and Orly have come back. They've been all over the place, as have Home Depot and Lowe's. Amazon is all green, so that's a good sign. And we had some positive volume action both in McDonald's here and in Amazon. Pretty much all XLP still looks lower. And healthcare, some bright shoots here, but United Healthcare got really whacked. And some of the drugs are still looking okay in here. BMY, Abbott, etc. Financials, new 3 DTS on Visa, Morgan Stanley. Of course, the bank earnings have been great. I'm looking for stock traders. Some of the really bullish chart patterns are in some of the regional banks, except they're closing up near the Stark bands, and so they need a pullback. And you can see the main problem for the information. You have Adobe, Intuit, and Microsoft are right across the board. So if we're going to see growth, gain leadership, look for some green shoots in any of those early in the week. AMD2 and TXN. Communication services continues to move higher. Of course, Netflix had a great week, so that's a good sign. And a mixed bag for some of the other ones. And utilities, back to pretty much green. A new 3DDS for G and for SO for Southern, and also real estate. Some of the REITs, AVB, flipped to a daily 3-day DTS positive signal, a good sign. In the themes report, MGM, VAC and HGV all positive here. Some nice buying going on there, and the whole group's looking pretty strong. Aerospace, other than Boeing, is all pretty positive, and oil and gas is like the similar measure. Also, lots of cross currents there. So, Chevron looks really good, and Devon does not look as good. And then if you get into the largest ones, you can see Tesla here, Microsoft are the real drags. So, and Meta, is kind of right on the fence here. 4-hour negative, daily negative, all the rest are positive. So I'll be looking for, we got a new negative 1 hour on Friday. Not too important, because it's more important if we see a 4-hour positive DTS early in the week. That could easily translate into a daily, and then it'd be green across the board. These are current stock holdings. This has been a great winner for us. Insurance company, another insurance company, we bought right back in here, and it just started to accelerate to the upside late in the week. Virtue continues to act well. FNT had a start, the tight trading range, surged up. So now, if our bullish longer term outlook is correct, then we expect to see this hold around this area and start moving higher again. We've been trying to capture play because of the weekly doji buy signal, but this drop back here was a little sharper than we thought, so we tried to get back in, unsuccessful. Apple, a recent addition, like this tight range in here, and it's acting really well. AVGO, of course, was hit by the other semiconductor node, but still in a positive trend, and we're in this one considerably lower, as we are in AXTA, and CTAS also broke out last week, so all looking pretty good. Well, I hope you're all having a good 6-week stretch in the market. You don't see these too often, and I hope you're pretty well invested and participating. If you're not, you might consider our services, because we're, as you can see from that, our positions, we have a lot of good winners there. The ViperReport.com, you can sign up for the ETF report, and if you're in that transition age where you're thinking about retiring and going into investing on a more full time, I think you'll benefit from the mentoring. It's one of the most cost-effective ways to become a good trader and investor, and enjoy that. We'll have another update next week.